Yo, yo, yo. How you doing, everybody? Damian Zamora, CEO of Go Mobile Solutions, coming to you live and direct from, you guessed it, Cabo San Lucas once again. Boy, the weather out here would blow your mind. Let's just say, for all of you freezing out there, I am so sorry. I love you and I feel for you because it is absolutely beautiful out here. And it's a beautiful Friday. And it's the first week of 2023. And this is officially the first Happy Hour Hangout of 2023. It's our third year delivering massive content to you week after week after week after week. And hey, you know what? We're not going to change that. We're doing it again right here with proper topic to start the year off. Because if you read in my email, these are some things that we need to be thinking about. Okay? You guys are all going to crush it this year. I was mentioning Connie Branch is kicking ass. Oh, Connie, you are killing it. Katie, you're going to be killing it. You got a $500,000 goal this year. So, you know, just like anybody else, it's important to shore up those assets, to pay less taxes, to make sure your family will be able to take advantage of all that hard work that you've done when you pass. These are things that we don't necessarily like to think about, but these are things that we've got to think about. Entity structure, asset protection, tax mitigation. Who the hell wants to pay more taxes than they need to? And so today, my friend Tommy's with me. He is the president of Prime Corporate Services. It's Tommy Thornburgh, and he's going to show you some stuff today that if you're not thinking about, I'm going to tell you. I'll be the first to tell you right now. Now's the time to think about it. Get the stuff, like really just have a moment with yourself as you realize you're going to have a big year this year. You are going to have a big year this year. Which means, you know, in advance, let's think about things that we can be doing differently so that at the end of our big year, we don't have to pay so much to Uncle Sam or Uncle UK or Uncle Canada or Uncle any uncle out there, all right? So welcome everybody to the Happy Hour Hangout, the first one of the year. We're coming off with a bang. And so, Tommy, what's up? Say hi to the Go Mobile community, sir.
What's going on, everyone? This energy, I've got a can of Damian's energy right here that I'm trying my best to get down. It's not as comparable. I'm in Salt Lake City, Utah, so when you talk about the terrible weather, I feel like you were talking directly to me. We got like 3-4 feet of snow in the last 4 days. I'm over it.
Well, I can tell you, you're going to need 2 cans, so you might want to take a break, go back to the refrigerator. You're going to need 2 of those cans to try to match this energy, bro. Let's go. Hey, man, I'm pumped about this topic. When I met the CEO, Steve Harward of Prime Corporate Services in July out here in Cabo San Lucas, and he told me what he was doing for entrepreneurs and the money that he was saving them and the white glove treatment that is all that Prime Corporate Services is all about. I was like, okay, man, I've been teaching people how to make money for a long time, for a lot of years. And this will be one of the first times that we actually teach you how to like work with that money in the right way. And so I'm super pumped about this topic. And so thank you, Tommy, for being willing to come on, being willing to share content. I want you to know, just like I mentioned to you, it's an informal environment. You'll see some of us have our cameras on. And I encourage all of you that are here, look, put your camera on and engage with us. It makes us feel so much better. We feel like we're not here alone. Of course, if you don't and you're not in an area where you can put your camera on, that's okay too, because we still want you here. And you get to interact with us by interacting in the chat. You know, interacting, you can go off of mute. So by the way, Tommy, just a little warning here. We allow our folks to go off of mute and say, hey, whoa, Tommy, take a minute. Can you repeat what you just said? So I hope you don't mind. It's an informal environment. We love to hang out.
I love it. I'm all about it. That sounds a lot more enjoyable than some of the other settings that I'm in. So thank you for that. And I can tell everyone right now, I already can tell this is not going to be the most exciting call, but it is one of the most important. And having rock music to lead into a tax conversation is something that I'm not necessarily used to, but it does absolutely make it a little bit more fun. So today I'm going to talk to you about entity structure, business credit development, tax preparation, tax filing, some of the best practices of what you can do to keep more money in your corner and in your business. And then, like Damien said, how to protect it long term. From a legacy play, it is not about what you make, it's all about what you can keep in your corner and keep in your pockets. Once again, it's not what you make, it's what you keep. I can't preach that enough. I am interested, if anyone wants to unmute and tell me or throw it in the chat, is anyone outside of the US? What do we have there? We have UK, Canada, Australia. If you're outside of the US, if you wouldn't mind letting me know where you are. I know enough to be dangerous outside the US, so I will speak in generic terms there, but if I can give everyone a couple pieces of value that you can leave this call saying that is going to benefit my business, that's what it's all about. Puerto Rico, oh, I'm jealous. You got the whole tax setup over there in Puerto Rico. Trinidad, Ireland, okay, great, awesome. I'll talk a little bit about corporations, and for those of you Trinidad, Ireland, you're going to be more sole trader and limited corporation, but there's still so many great tax benefits as you start to generate and build wealth. Canada, okay, great. Thank you for that.
Yeah, like we don't have to help Hector too much on the taxes front, man. Coming from Puerto Rico, what do you pay on capital gains? Like 0%? I know it's like 4%.
Yeah, it's like 3 to 4%. Hector, if you got room in your house, I'm on my way.
Hector's my brother from another mother, my fellow Puerto Rican brother.
Awesome. Well, today's key takeaways. Number one, let's talk about the different types of business entities that are out there. We get asked all the time, when should I structure my business? How should I structure my business? What are the different options and how do they benefit me as a business owner? Number two, what in the world's a tax deduction? How in the world does it work? And what do you qualify for? Because a lot of you are going to be considered self-employed, home-based entrepreneurs. The beauty of that, there's over 250 different deductible expenses that come with that title there. So number three, asset protection and generational wealth. You'll hear me say multiple times, personal is personal, business is business. And the more that you have the vision and the goal of separating the two, the easier it's going to be to continue to grow and scale your business for what the ultimate vision is in building your empire. And then number four, oftentimes a crowd favorite, personal credit versus business credit. How to build a separate credit profile for your business so that you can use business credit, let the business pay for itself, and then pay yourself from there. Separate those liabilities, keep yourself organized from a tax standpoint, and then allow the business to pay yourself. Okay. Let's keep the chat going here. I'm interested in what makes the most sense to you, or what you're most excited for, what you feel you need the most additional guidance in. 1, 2, 3, 4. We could even do a 5 for all of the above. But I want to know what you want to know. This is for you. I want to bring as much value as I possibly can here today to make sure you have some major takeaways that'll save you money and protect you and your business. For Hector, of course, Hector in Puerto Rico says, I don't need the taxes. Let's talk about the credit. Awesome. Thank you.
One thing I'll drop on you here from Katie Fletcher, she's got a $500,000 goal this year. She's not sure whether to collect tax from her clients when they purchase an app. So maybe put that in a little tickler to address down in deeper into the presentation.
Perfect. Will do. Yeah, I've got a slide that's going to talk about the difference between active and passive income and how you're going to end up having them pay you out. So we'll make sure that we talk through that, because there's some amazing strategies where you can still collect your money but get a lower tax rate long term. So that's good to know. I appreciate it. All right. Wah, 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 wah. Legal disclaimer. Everyone's got one. We got to go over it. We do. If anyone wants to read it, raise your hand. You're more than welcome. If not, I'll summarize it for you here. to start with the legal disclaimer, first and foremost, everyone's situation is different, right? Some of you are married. Some of you have W-2s. There we go, David, you're up. Some of you have the W-2 income. Everyone's situation is different. I'm going to give you a 30,000 foot view here, and hopefully I can answer as many questions as possible today. But know that your situation is going to vary based off of your income and based off of your situation. The second component, I am not a CPA and I am not an attorney. Like Damian said, I'm the president here at Prime Corporate Services. I do have a full team of accountants and CPAs. I could have brought them on and they would have put you to sleep faster than I would have, so we didn't want to do that. And I do have a full team of attorneys that help with all the work and all the structuring. But one, I love giving these presentations. It's fun for me. Two, I like talking to you as an investor and as an entrepreneur. I've been self-employed since I was 18 years old. I've made a lot of mistakes. I've had a lot of wins. We started Prime Corporate with 4 people, and we currently have about 200 employees total. And throughout that process, I have made some serious mistakes that I can help you understand how to avoid. So
you got in business at 18 and you're now 21?
21 years old. It's been a long 2 years. It's been a long 2 years. My first beer after 21 years old.
Yeah, it's a joke. As I'm, there was a time when I was the youngest guy in the room, and now I'm always the oldest guy in the room. So I like making jokes like that. But anyway, it's all good.
Yeah, when I was, so my little backstory there as well as to why that even happened. So my mom was a real estate agent. My dad owned a real estate brokerage, and they split when I was really young. But the only thing they had in common is they wanted my sister and I to be self-employed. That's the only thing they ever agreed on, is that their kids should be self-employed. And they argued during tax time. They did all these different things. So when I was 18, it was almost like I can't go get a job. I was working in a ski shop the last couple of years. My parents are going to disown me. So I went and knocked door to door selling pest control in North Carolina. And that started the self-employment career of, I was 18, 3 months, I knocked door to door and made about $40,000. I felt like I was the smartest human in the entire world. Came home, told my mom, you can't tell me anything. I've got it all figured out. And then Uncle Sam wanted $10,000 in taxes. And I said, sorry, Uncle Sam, that money is gone, my friend. I've already spent that. You kidding me? So I learned that valuable lesson around tax minimization and how important it is at a very early age. And when we started Prime Corporate, it was just that. We had the goal in mind of saying, there's a huge market for big businesses that can hire these corporate attorneys and these big CPAs and bring them in-house. But when you're just getting started, it's really hard to get good advice and good information on how to set yourself up properly to grow and scale a business. So that's where we saw the niche, and that's where Prime started 10 years ago. And since then, we've helped over 100,000 entrepreneurs structure their business. Pretty crazy stuff. So as far as business structure, let's start here. When it comes to business structure, there are so many different options that it creates a lot of analysis by paralysis of what do I do, what's best, and when should I do it? Is that safe to say? So for anyone that's self-employed, hairdressers, Uber, Lyft, real estate agents, insurance agents, a lot of times when you have 1099 income of any sort, people will opt into using their name and their social security number, right? So with that being said, you're considered an informal business or an individual. Sole proprietorship, general partnership. The problem that I have with informal business structures is there's no asset protection and there's very limited tax benefits. Okay? So what the IRS is looking for those of you that are US based, the IRS wants to see that you are showing the intent or the intention to generate income or generate a business. Once you show the intent, and that's important. Roger, Katie, I see you taking notes. intent to operate a business. What that does is it opens the doors for you to be able to take business-related deductions that are ordinary or necessary for your business. Very, very important. Ordinary or necessary. I'm going to talk more about taxes next, but remember that if you're thinking to yourself, how do I know if this is a business-related expense? Tie it back to that comment right there. Is it ordinary or necessary for my business? Right? If Damien and I were to go to a lunch, that's not necessary for business, but it's ordinary. We're naturally going to talk about business, and it's going to become a business meal, which becomes deductible against my business income. Right? Massive benefit, massive value as far as the tax side is concerned. So for those of you that are potentially just getting started, we oftentimes will recommend starting as an LLC, limited liability company. It keeps things simple, it keeps things easy, but it gives you protection. And then what it also does is it opens the doors for additional tax benefits down the road. Right? If we were to start with an LLC and you were to go generate that first $50,000 to $100,000, we're going to change the LLC so that it's taxed as an S corporation. And now what that allows you to do is it allows you to pay yourself a salary or a distribution. And it also allows you to avoid half of your self-employment tax. Medicare, Social Security saves you 7 to 8%, right? Make $100,000. I'm confident in this group to find a better place for $7,000 than Uncle Sam's pocket right off the top.
Can I ask a question?
Please do.
Okay, so different states, and I'm not talking about Puerto Rico. Let's put that's like a unicorn. Different states, Arizona,
right?
Nevada, when it comes to state income tax. So is it even more in states like that?
Yeah, so that's on the federal level. So you've always, anywhere in the US, you've got a federal tax and you've got a state tax. The federal tax is going to remain the same. The state tax is where it varies state to state.
Okay, so your example that saves us potentially 7% was on the Fed side.
Correct. Yep.
Okay, got it. All right, I'm following.
Yep. Social Security and Medicare is your self-employment tax, and that's where it cuts it in half. It's a huge value, huge benefit. I see Roger in the comments here saying Maryland, Massachusetts, California, you need all the tax help you can get. I know that's Roger knows. So the more that you can benefit on the federal side, we'll deal with the state side, but that's where it comes down to. It's not what you make, it's what you keep, right? And if we can take those deductions and offset that, a lot of it is going to depend on how your business is structured from the very beginning, right? What I want to do is the legal and the financial can become overwhelming. It can feel like, oh my gosh, this is so much information. Put your focus on generating income, right? But if we simplify business structure, and anyone, this is for the note takers, this is for you. If we simplify business structure, we're trying to accomplish 3 things. Number 1 is privacy and protection. P&P, privacy and protection, right? Personal is personal, business is business. Number 1, privacy and protection. Number 2, tax benefits, profit and loss. What's your P&L look like? What's your business operating at? What's your true profit margin? Number 3 is showing yourself as a legitimate business, not only to your clientele, but to banks and lenders as well, right? What I love about the intent to generate income that the IRS allows is, from a psychology standpoint, if I was to come on this call and I was to say, hey, my name's Tommy Thornburgh, I look forward to talking to you. As opposed to, hey, my name's Tommy Thornburgh, I'm the president of Prime Corporate Services, it creates a little bit of a different posture, right? And I think that all of you deserve that because you have the intention to be generating income as a business owner, right? Now, for those of you that are international, I'm going to try and touch on both sides every slide. International, Canada, UK, all these other areas, Ireland, I heard, it's a little bit different. The US, it's easy to build credit. It's easy to build business credit. You can show a loss 3 out of your first 5 years in business in the US. I truly believe everyone in the US should be self-employed to some extent because it benefits you that way. But internationally, you do need to generate some income in order to offset that with some of these deductions. But a lot of the deductions are the same. So international, it may make more sense to start as a sole trader and then move into a limited corporation or an incorporated as you generate some income over time. But in the US, there's benefits right off the bat because you've made a lot of these investments already. Okay. Any questions on entity? Anyone want me to clarify anything here as far as business structure?
One thing that would be helpful. So when you set up the LLC, and this might be getting too deep in the weeds right now. If it is, we can put it to later. But and then we convert it to an S corp. Why is that an advantage, and why does that have to be done after the fact? So like we have to set up the LLC, and then we're going to change it to an S corp after it's already been approved and set up, and then what?
Yeah, good question. Thank you for that. So there, and this also answers your question right here as well, Katie. This I'll answer both at the same thing because they're very, very tied together. So our goal with Prime Corporate is helping people no matter what the situation is, right? Good or bad, profit or loss. How do you put yourself in a better position, right? So with that being said, when you start as an LLC, you get startup expense deductions. $5,000 there. Organizational expense deductions, $5,000 there. When we switch to an S corp, and it's very, very simple, Damien, to switch it over with the tax election. All we have to do is submit a 2553 form to get technical on you. You just submit one form into the IRS, let them know that we want to change the tax election, and that'll change you to where you're taxed like an S corp. But the reason we don't oftentimes do that in the beginning, unless you're already generating income, is you need to make enough with that S corp election to justify paying yourself a reasonable salary or distribution.
Got it.
What's reasonable, right? Everyone lives off a little bit of a different number. So 50 to 100,000 or more is where we start to see the benefit and the justification of paying yourself that reasonable salary or distribution.
Got it.
Right. So that's, I think I saw another one in here that I don't want to miss.
And we can come back to some of the stuff too. So just.
Okay,
All
awesome.
up to you. Okay. Yeah, 'cause people are pounding in the questions. And so I expect that. I mean, this is a real hot topic right now. I mean.
Yeah, this is where we are in the year, right? And this is, what I love about the opportunity of being able to talk to you January 6th here is we have all year. And if you create good habits around these things now, the best way to beat the IRS is by tracking the expenses throughout the whole year. The best way to win, taxes are a game, right? Remember, I'm not a CPA. So as an investor and an entrepreneur, I can tell you the tax code's a joke. It's over 70,000 pages. It's absolutely ridiculous. However, the tax code is meant to impact behavior. Tax code changes happen every single year because they want us to act a certain way. Now, once again, being self-employed, home-based entrepreneurs, there's over 250 different deductible expenses. The cost to be a part of the community, tax deduction. The phone, the internet, the power. Katie, Roger, Katie and Roger, you guys are in my little view that I see over here, so I'll be picking on you for the next hour here. I apologize. But I see that you're in a home office, right? Writing off portions of the rent or the mortgage. Travel expenses, events, mileage expenses. Do you have to buy a new computer, tablet? Once again, remember what I said. How do we make it ordinary or necessary for our business? this camera that I have, the light that I have, the computers, the mouse, the headphones.
The guitar, because he's going to play us a riff before we leave this webinar today.
Hey, I got to show you. We'll take a quick breather. Let me show you this thing. I don't even know how to play it. I just had someone gave it to me as a gift for speaking at their event.
That's beautiful. I thought you were about to get into a riff. That's awesome.
That's all I got. When you were singing in the beginning, if I had just an inkling of how to play that thing, that's what I've been doing. But anyway, that's
opportunity soon.
Damien, I want to ask you, and because obviously I know you've been doing this for years and you understand a lot of the tax side because you've had to go through it yourself, but like what other expenses or deductions or things that have either benefited you or that people can really benefit from what you've seen over the years?
Okay, maybe I should put a disclosure. I'm not an accountant. I'm not a lawyer. I'm not a CPA. I'm not a financial advisor. I'm none of that shit. In fact, I probably don't even know what I'm doing. But, when I take folks out, when they come to Cabo, almost anything I do is a tax write-off. I'll challenge you to challenge me on what might not be a tax write-off. If I take someone to dinner, if I go to golf, if I go to Costco and load up for them to be here, because you know what? I do masterminds, I host people staying here and things like that. And so almost anything I do in Cabo San Lucas, this destination spot in Mexico, mind you, I write off on my US taxes. Why? Because they're business expenses, because I still pay taxes in the United States. So I'm still subject to my write-offs and all of those write-offs, and it's all fun. When I ride my buggy out there, all of that stuff to me, if I take someone out on a tour, if we go swim with royal sharks and maybe some members of my family are with us, and maybe it was 20 tickets that I bought, that's a tax write-off for entertainment. It's not 100%, which I'm going to leave that to the experts. But again, these are some of the things I do. Now that's the fun side. But like on the business side, the time that we spend, all of the technology that you have, obviously that's obvious, right? All of the technology you have, all of the travel. Like even if you, in my opinion, if you travel personally, if you go to see family for the holidays, all of you sell mobile applications. All you got to do is walk into 2 or 3 businesses and grab the business cards, try to give them a pitch if you want. Maybe you might walk out with a sale, but you can write your entire freaking family trip off because you attempted to sell business. We have a Go Mobile business. We're not subject to doing business on Main Street where we are. We do business all over the world. All of you do business all over the world. So when you go to Bali, or when you go to Thailand, or when you go to Tokyo, or when you go to UK, go stop at the businesses, grab the business cards, and you might as well pitch them, because guess what? Go Mobile is a global opportunity. All of that is write-offs if you're set up the correct way. Back to you, Tom.
100%. I love it. This is my beautiful daughter. She's almost 2 years old. She makes $12,949 a year. And the reason for that is I get to talk about these things. I get to watch. She's a model, right? Every parent, every grandparent's got the model children. But what that does is I pay her and I get to write it off, and she doesn't have to file taxes on it. You can pay your kids, you can pay your grandkids. A lot of times there's got to be reasonable work that's associated, right? There's always red tape, but that's what I say when you talk about taxes. If there were 2 recommendations I could give anybody from a tax standpoint, number 1 would be track your expenses. I don't care if it's an Excel spreadsheet. I don't care if it's QuickBooks. Maybe you hire a bookkeeper at some point. Maybe you have one designated credit card that you put all of your business-related expenses on.
That's a good idea, by the way.
Right? If you're not tracking your business-related expenses, you will be leaving money on the table at the end of the year. That's a guarantee, because you're going to.
But I like that idea of a single debit card / credit card that you use for a business bank account, that everything you put on that, you're basically going to write off at the end of the year. And that's the best tracking tool for me, at least.
That's the first recommendation. The second recommendation, hire a professional, right? Because if you do get a little bit overzealous and you were to get audited in a worst case scenario, have someone that can protect you. Have someone that has your back and understands the tax code and signs their name on it as opposed to yours. Even my full team of accountants and CPAs, they file each other's taxes so that they don't have to defend themselves if something like that were to happen.
That reminds me of a phrase we've all heard, in that where you don't skimp or cheat, skimp, whatever you want to call it, is your lawyers, your doctors, and your financial advisors, right? Those are the three areas we don't want to skimp, right?
Yep, for sure. It makes a massive difference. I joke all the time, if you say, well, I could do my taxes for free, get a $5,000 return. What if you pay $1,000 and get a $10,000 return because you hire a professional?
Now that's a great example.
Right? That's what it comes down to, is and also, where is your time best spent? Are you better off looking for prospects, generating income, and building your business, or focusing on this stuff that you don't want to do anyway, right? Additional benefits of making sure you are structured properly. And this goes for everyone, no matter where you are in the world. It is a sue happy world that we are living in, right? I'm sure we can all agree there. And this is where, if I brought my attorney on here, they'd have spent 45 minutes on this slide, so you're welcome. But I want to still bring it to your attention. LLC stands for Limited Liability Company. And the goal is to separate the personal and the business legally and financially. There's 40 million lawsuits that are filed every year. 76 a minute is what that averages out to. And I don't tell you to scare you, but what I will tell you is a lot of successful people and entrepreneurs will say you're not in business until you've been in a lawsuit. Why? Because if you set things up, or it's not if you get sued, but when you get sued, the peace of mind that comes with that, the clarity of separation, and if there were to be a lawsuit, separate those things out. Roger, I don't know, I saw you talking about real estate and marketing and all these. You don't want to intermingle all these different revenue streams as you continue to grow and scale your different businesses or your different revenue streams, right? I don't want one business to be affected by the other business, but I do want the protection for my personal home, bank accounts, retirement accounts, vehicles, so on and so forth. So once again, the legal protection and the tax savings, I know it's not the most exciting, but I think we can all agree at the end of the day, it is truly one of the most important, because you're working to keep that money in your corner and separating those things liability-wise, right? Damien, I know that this is just depressing slide, but anything you would like to add here?
No, I mean, look, at the end of the day, when Katie, for instance, right, she talked about how many apps she would sell this year for her $500,000 goal, selling apps at $3,500 a piece. What if one of those apps, not to cast a negative cloud here, but let's just be real. What if one just absolutely felt that app, once it was published, pissed them off in some way, hurt their reputation, hurt their credibility? Like, by the way, this is totally hypothecating here, and it's never will happen. But let's just say that one person wants to sue Katie,
right? Because
of the app, they didn't like it. And they want to add all these things that are stupid and ridiculous. And my damages are like $20,000, $100,000. Oh, my reputation, it's $1 million. That's the problem, is it's a litigious world we live in, and frivolous cases left and right. And people can set the number. Oh, I was damaged by $1 million. Well, show me how. Well, they still get their due process. So the fact of the matter is, and being in business for 30 years, I've had my share of lawsuits, both on the plaintiff side and the defendant side. It's not a matter of if, it's a matter of when, especially when you're rocking. Now, here's the thing. Don't let that scare you. We want to freaking kill it, right? We want to rock. We want to crush this year. We want to bring in $500,000 like Katie. Hell, we'll be happy with $100,000. But you know what? Right? We can be that excited to do that if we had the shield that if any one of the bad apples show itself, I'm separated. I don't have to worry about my house, my cars, my personal assets, or any of that stuff, because I'm behind a corporate veil. And that's why I think it's important, once we start playing ball and we have a true intention to crush it, that we set that insulation up. Always, everybody. Because it's not a matter of if, it's a matter of when. And I hope I didn't just scare all of you, okay, I don't want to be in business anymore, I'm done. Because guess what? The only way to true financial security and true wealth that you can control and life by design that you want is to be an entrepreneur and run your own business. And so to do that, you gotta man and woman up a little bit and just make sure that you're set up correctly. Hey, and guess what? Being able to do all the write-offs pays for it. What I talked about was all the fun stuff to write off. I'm sure you did stuff all year last year, all of you, that you could have written off in just kind of the ways that I was explaining, some of the ways that Tommy's been explaining here. But also protect yourself from a potential bad apple. And so that's my 2 cents on that, and I'll throw it back to you, Tommy.
I love it. Yeah, thank you for that. Let's move on. I will say some of you as well, it may be a little bit of that peace of mind that allows you, so, a lot of times it's analysis by paralysis, like I said earlier, where you overthink it and you don't end up taking action. And a lot of times the first one is the most difficult, right? So for the extremely analytical, logical thinker, hopefully this gives you a little bit of that peace of mind to go take the action to be able to get yourself up and going as well. So it's not all necessarily negative. For some of you, it really could be what feels like crossing the T and dotting the I to legitimizing yourself as a business. For Canadians, that would fall under a limited corporation. LTDs would be where you would want to make sure you have that protection. And Renison and everyone, international, it's a little bit different because you'll have your Providence entities and you'll have your regional entities, right? You usually only need to set something up within your Providence to keep your costs down, and that way you don't have a return for every single different Providence. Canada specifically is one of those that you can just set it up in the Providence that you're located in.
Dude, Tommy, you know your shit, man. I'm telling you, this is awesome that you can actually address like folks from all over the world here with this content. This is great. This is great.
Cool. Good. I'm happy. Thank you for that. And I will tell you, like internationally, I do know enough to be dangerous. And that's why I talk on the surface international. But I actually partnered with a company out of Canada probably about 5 years ago. And they just sucked, to be honest. There's no easy way to say it. So we had to part ways. I'm still looking for someone that I trust, know, and love out of Canada, but easier said than done. So it's also more difficult. Once again, it's to their credit, I am used to operating in the US where they allow you to take a lot more losses and deductions, and they allow you to build these business credit and corporate funding lines where it's not the case internationally. It's a little bit more complicated. And to the person that I partnered with previously, that's probably some of my lack of patience as well, of wanting to get things done at a high level. So any questions, by the way? Asset protection?
There are, and I don't know if we should go back and hit those or wait till the end. I mean, there's a lot coming in here.
Let's go. Let me go over this business credit because it's so awesome, and then we'll go over some questions. Is that okay?
That works.
All right. So personal credit versus business credit. This is for those of you that are more US based, but once again, internationally, it works the same way. It just takes a little bit longer, which is just fine, right? It's not about where you are right now. It's where you're going to be in 5 years, 10 years, 20 years. So those of you that are in the US, you have a legal name, you have a social security number, an ITIN number, and you have a FICO personal credit score. We want to do the same thing for the business. Let's make sure you have the business name. Let's make sure you have the EIN or the employer identification number. And then you can build and develop that separate credit profile that's called a PAYDEX score. That as you build up that PAYDEX score, personal's personal, business is business. And this is one more way how you can truly separate your liabilities legally and financially. I joke all the time that I'm okay with my business credit looking a little bit like a roller coaster because that means I'm lending money to go generate more money. I'm not okay with my personal credit looking like a roller coaster because my wife would probably kill me. Other than that, I'd probably still take the risk, but that's a whole nother story. So the bottom line here is, if you structure your business properly and give yourself a solid foundation, it makes it a whole lot easier to build the empire that you're after and to grow and scale your business while keeping yourself protected, maximizing on your tax benefits, and truly showing yourself as a legal business, legally and financially. So, Damien, how do you want to go about this? Should we open it up, do some Q&A? What do you think's best?
Well, we can totally do that. I mean, there are some questions here. I'm going to scroll up. I don't know what you addressed or what you didn't, but I'll start with, can you live in one state and have a business in another? That is yes.
Yep. I got one more slide that I'll just share on this to sum it up. These are just a couple businesses that I actually personally have in place, and I've put this together to try and explain it. Eventually, you're going to want a full estate plan, right? Trust, will, living will, power of attorney. These are things that I have up top. Underneath that, I have a holding company that is based out of Wyoming. So Delaware, Nevada, Wyoming, they have additional privacy and protection laws that other states don't offer. Okay, so my holding company is based out of Wyoming. It doesn't do any business. It simply owns my other businesses. And the reason that I've done that is if my consulting business was to get sued, they wouldn't see that Tommy Thornburgh's the owner and my address. They would see that it's owned by another corporation that happens to be in Wyoming. I don't have to say who the owner is in Wyoming on a public forum. So it gives me that privacy. I can't avoid getting sued, but I can make it more difficult and I can give myself that privacy. I had a really powerful story. I worked with a real estate investor a couple years back that was just getting into real estate, bought their first property, and about a month after they got into it, they rented it out to an absolutely insane tenant. Florida gets hit with a hurricane and the house's power goes out. That tenant shows up to the house based off searching their LLC and is banging on their window trying to get in the house. Now, fortunately, they call the police, everything works out, everything's totally fine. But his wife almost made him quit real estate because of it. Instead, we made sure he had a holding company. We made sure he had the privacy. We made sure his address wasn't listed on anything. And in a year, he was able to quit his job and retire his wife. And if she made him quit and he didn't have this solution, who knows what would have happened? They still would have been at the W-2 for who knows how long. So it's a peace of mind play. It's a protection play. And separating your different revenue streams is a great idea, not only to give yourself a true profit and loss, but also to make sure that you're not separating that liability as well. If I start a U.S. business and build up credit for maybe 2 years, can I take out a mortgage on a house in Ireland? And is it very difficult to get approval? Raymond, my word.
That was a biggie, wasn't it?
Jeez. If I've learned anything,
I actually want to learn that. I'd love to go buy a castle in Ireland one day. I like this idea. Tell me more.
Should we go play the old course? I heard you say golf in there. We might have to ride off a trip to the old course to visit Raymond here. I don't know.
That bucket list right there, bro.
I couldn't tell you with total certainty. I would imagine that it's doable at some point based off of the revenues of the business. If there's a will, there's a way. I've noticed over the last 10 years or so, but I don't know for sure if a U.S. would allow that to qualify out of Ireland. I could. You've stumped me, Raymond. Thanks a lot.
Yeah, so I'll take a shot at it, which this won't really help you, Raymond, really, so I probably shouldn't, but I'm just going to do this. And so, like, I live in Mexico, right? And one of the things that they do out here in a buyer's market, okay, and not right now. Right now is a big, right now is a big time seller's market, okay? But in a buyer's market out here in Cabo San Lucas, destination spot, people have to do what, if they want to sell their house, if they're an American, let's say, and they want to sell their house, or even Mexicans that want to sell their house, like if it's $500,000, $1 million, or whatever, they got to offer, or they did have to offer seller financing. And the reason for that is You get an American down here and they get all hot and bothered and they want to buy a house and they got assets and everything in the United States, but no bank is necessarily going to just give them cash or a mortgage to buy a Mexican property with the way that all is, right? And so here's what I understand. I understand that you can get a cash loan in the United States to come in and buy your property in Mexico if you want to do that. There are some banks now that are in Mexico that are realizing that everybody wants to move down here, not Mexico, Cabo. Everybody wants to move over here to this destination spot. So now we're going to start offering mortgages to Americans. Totally different, totally unique. It wasn't 5 years ago when I moved here. So let's just go to Ireland. Like, to have credit in the United States to buy property in Ireland, I don't think it works. I don't think the bank, I mean, unless they can control the title somehow, like, I don't know. I don't think it works. I think you have to establish the credit, produce the cash, and then make a cash purchase. Or what do you think?
I think that would be, so my dad actually lives in Nicaragua as well. And the properties that he has sold in Nicaragua, you're absolutely right. It's usually at least 50% up front.
Yep,
and then seller finance on the second portion, which sounds like it's the same in Mexico.
Because it doesn't require credit and it's not a bank. It's a person to person. It's like I'm your bank.
I have a hard time thinking a mortgage would be the answer, but it could potentially be done with some sort of a line of credit.
That's what I was looking for. Thank you. So that should be your answer, Raymond, and is that you could get a line of credit by establishing 2 years of business credit in the U.S. That line of credit could then be used for acquiring properties in other countries.
Katie's got a good one right here. So do you have to pay yourself under the S Corp? You do have to justify a salary or a distribution. And let me tell you what the difference is, just so we're clear and on the same page. A salary is a set salary. You pay yourself weekly, bi-weekly, quarterly, monthly, whatever that looks like. A distribution is usually what I recommend for solopreneurs or single business owners, where you get to the end of the year and you say, I made $100,000, I paid myself out 40, and that other 60,000 is where you're going to take your business related expenses. Being self-employed is beautiful because when you have a job, you go to work, they take the taxes out, they give you what's left, and you pay your bills. You cross your fingers, you get a tax return because the IRS took too much money from you throughout the year, right? It's ridiculously backwards, stupid setup, but that's a whole nother story. When you're self-employed, you go generate your own income, you reinvest back into your business, and then you pay taxes on what's left. It gives you so much more control in allowing yourself the ability to grow and scale. So I love distributions, Katie, because it gives you the time to where when you make that 500,000 and you get to the end of the year, the fourth quarter should feel like a shopping spree, right? Last week, I bought a fourplex. I invested into a 70 unit in Texas. It's like, buy new computers, put money into marketing. You're doing different things that are lowering your tax liability, but are helping build wealth long-term. So I love the distribution route. Can you live in one state? We got that one. What if you start an LLC in a state different from where you live? Or is it only done with the S Corp or the Corp? Yeah, so this slide here that I have up is the same example. I'm in Salt Lake, but I've got a Wyoming entity, I've got a Montana entity, I've got Utah, a bunch of different Utah entities. So it doesn't have to be in the state that you're in to answer that.
Jeez, I'm not doing it right.
I sell into the pet care services business niche. Can I write off my dog food or pet care insurance?
Of course.
Hey, marketing. Everyone should be a consultant or a marketer at some extent if they want to maximize from a tax standpoint. Consulting and marketing is just amazing when it comes to deductions.
Yeah, absolutely.
Right? Before I had my daughter, I tried to write off my dog. My accountant didn't think that was very funny. I wasn't joking, but I couldn't write off my dog. Can't write off the dog, but the other things marketing wise absolutely go into it. Could you address how to handle when one has two businesses, say real estate, local business? Roger, this was the question that I referred to, and I actually love this. If the businesses are different, you want to separate them out, right? I don't want my consulting intermingled with my trading accounts. Active income. Oh, you know what, Katie? This is another good one that we talked about earlier that I wanted to come back to. If you sell something transactionally less than 12 months, if I tell Damien I've got a phone for you for $1,000 and I'm paying taxes on that $1,000 because it's transactional, then it's considered active income and it's taxed at the highest rate. This is where I want to lower and try and offset my deduction as much as possible. But if I tell Damien, give me the $1,000, Damien. Actually, you know what, Damien, you can give me $500, and then you're going to pay me an extra $1,000 on payments for the next year. That would be considered passive income at 0 to 20%. Yes. So if it's passive, it's going to be more of a long-term gain. An easy way to think about it is real estate. If you wholesale or if you fix and flip, it's active income. But if I have long-term buy and hold real estate, I love that because it's passive and it's taxed at a much lower rate. Okay. But I do want to separate out my liabilities for the different types of business as much as possible. I saw you can contribute to the 401k as well. Yeah, 401s, IRAs, SEPs.
That was regarding the model, your daughter, and all of that. So that's why she was saying, I saw that you can contribute to her 401k, right, Katie? Because it was when you were talking about that.
What I love, why don't they teach credit in school? Why don't they teach tax in school, right? I joke all the time that I graduate high school and I can do algebra. Algebra seasons never come. I had no idea what to do with my taxes. Tax season comes every year. No one cares about your money more than you do. And the more that you understand how to play the game, the easier it is to win. And what I love about understanding this now is I get to teach my daughter that if I pay her $12,495 a year and I put that into an IRA, that IRA should be worth about $1 million by the time she's 25. I have her co-signed on a credit card and I help her understand how to balance a budget. And I have her with an 800 credit score by the time she's 18. Now she's got a choice to make. Do you want to go to school? Do you want to start a business? Do you want to throw the good credit down the drain? That's your choice to make at this point. But these are things that can really give future generations a massive leg up as well from a financial standpoint. And I love that. I'm all about that. My daughter's 2. I think I can have her with an 800 credit score by the time she's 5. It'll be a cool YouTube series. If I do, I'll make sure.
I love that. Love that.
Is it better to take a 1099 payment as an LLC or a business? And does my LLC W-2 me? Jay, anytime you have a 1099, if you can run it through an LLC taxed as an S Corp or an S Corp, it is going to benefit you tax-wise. You will pay less in taxes. That self-employment tax will benefit you. And I go as far, I can't tell you how many Uber and Lyft drivers I've helped set up business structures with because I don't know how to shut up in the back of a car when I'm traveling for work. I'm writing off the Lyft and the Uber. I'm helping them understand how to keep money in their corner, right off the vehicle, right off the mileage, right off the insurance. Any 1099 income, there's benefits to treating and operating as a business. Take revenue and profits first. Depends on your model, Carl. There's a book. There's a book and a model. I'm drawing a blank here. Profit first. And if you're following that model and you're paying yourself first, then obviously that's probably where you're getting that from, Carl. But understanding what your profit and loss is as a business. If you don't have a profit and loss, banks and lenders will tell you you don't have a business, you have a hustle. And we're all having to hustle when we're talking about business, right? There's always a hustle aspect, but going from hustler to entrepreneur to business owner is a life-changing thing. And it starts with having the proper business structure and the proper P&L, right? Do you recommend personal umbrella insurance? I personally do. I personally have umbrella insurance myself. Damien, what do you recommend on that? You would know better than I here.
Yeah, I mean, when it's necessary, right?
When it's necessary, I think for sure. And it's cheap. Umbrella insurance is cheap. It's deductible. But if you have assets and if you have liabilities, giving yourself protection and having insurance is oftentimes, I think, a great safety precaution. And it's very, very inexpensive to have umbrella insurances.
I mean, there's 50 different types of insurances we can all have to protect all the shit that we don't have.
Right? Yeah, good point. That's a great point.
You know what I mean? So it's like, really, you live in a home, you better have home insurance, right? Bottom line, because, acts of God, all that stuff. But I think umbrella insurance, key man insurance, if you're just a solopreneur, 2-man operation, 2-woman operation, do you need key man insurance? Maybe, probably not. I mean, it's not super expensive, but again, we can just get all kinds of insurance for a bunch of stuff we don't need. But there are things that we do need that are clear, as we go along in our journey.
And here's the other thing with that as well. Like, if anyone's just getting started that's watching this, don't let this overwhelm you. Don't let this slide overwhelm you. Don't let the insurance conversation overwhelm. Crawl before you walk and walk before you run.
Exactly.
But those of you that have the vision boards and those of you that have the why walls, you have the fancy cars, the vacations, the Cabo San Lucas, I challenge those of you that are extremely visual like that to think, what does your business structure look like in 5 years, 10 years, 15 years? What streams of income are you after? Right? If you understand where you're going, it makes it a whole lot easier to get there. My wife would be the first to tell you, if I didn't have Google Maps, I'd just drive around the city in a circle. So same thing with your business. Know where you're going and have the roadmap, right? This is a good one right here. How do you know what your credit score is for your business, or where do you find it? I love this one. So 2 things. Dun & Bradstreet has unfortunately pretty much monopolized business credit. So dnb.com is a good free way to check it out. There's also another one that I love, but there is a monthly fee on there, just to warn everybody. I think it's like $30 a month, nav.com. But those are 2 areas that you could check your credit profile. I threw them into the chat for everybody if you want to jot those down. Nicaragua, not a safe place. I agree. I think my dad's insane, but that's a whole nother Dr. Phil episode that we'll save for next time. I'm just kidding. He's still surfing. He's out there doing it. He's
Hey man, people thought I was crazy moving out here, and I think they're crazy staying where they're at. Just saying.
It's amazing. He's in San Juan del Sur, so they got a lot more security over there than they do in like Managua, for instance. But it's to each their own, like you say. And I'm ready to get out of Utah and join you in Cabo. I'm sick of this. For every state that you have an LLC in, do you have a registered agent? What else is needed to operate LLCs out of state? Latoya, great question. Registered agents in every state is usually the best way to go about it. And registered agents are amazing as well, Latoya, because it gives that additional privacy and protection of not having to use your address. So that's one of the reasons I use registered agents for all my entities, so that I don't have to use personal entities. All right, Raymond, we're all going to visit Raymond, it sounds like. That's the next stop. Next mastermind's in Ireland, it sounds like. Raymond's hosting everybody.
Yeah, I'll be going to Ireland in 2024. My stepdad, who's been my dad since I was 2, is Irish and Scottish, and so he wants to go see his roots and all that stuff, and I'm pretty excited, Raymond, because it's a bucket list for my wife and I, and we want to do it before my dad passes on. Like, he's in good health and everything's great, but he's 71, and so this is a life thing for him. So we're going to see you in 2024, my man.
Cool. That's awesome. Where could you place a self-directed IRA that holds property in this model at an LLC level or a holding company? If you have a self-directed IRA, you can have a checkbook entity, which is probably what you have, and that checkbook entity would purchase the property. So the IRA would be owned by the LLC would purchase the property. Profit first. Thank you, Derek. Appreciate it. Biggest client would only sign based off of LLC and having business insurance. Here's the other thing about showing yourself as a business. Katie, thank you for that. I go back to the psychological aspect of showing yourself as a business and believing it, right? Here's the rude reality. We started Prime Corporate Services when I was 22. I'm 32 now. I turned 33 in a couple months. And I think everyone has some of that imposter syndrome, right? I know I did. I still do to a certain extent. There's stages that I've talked on 3,000, 4,000 people. And I'm like, how did this happen? And where in the world did this end up even becoming a thing? But when you're first getting started or you only have a couple clients, regardless of your history, regardless of your past, regardless of how many people you've helped, I think everyone deals with a little bit of that. Why not give yourself the push of, here is my business. This is my business. Katie, I'd be interested to hear from you on this one. Do you feel like it was a confidence booster for you as well as a legitimacy factor for the client that ended up signing with you? What went into that? I'm interested to hear.
Right. Well, it turned out, I hadn't even thought of it, but this was a fairly sizable client who had a huge law firm in New York, and they reviewed everything, and sure, it's part of that. But when I actually had to shell out, and I forget what I'm paying a month, $80 a month for business insurance, professional business insurance, it gave me confidence, and I realized, oh my God, this is serious stuff. I am running a business here, and I could be sued for some sort of poor performance of some sort. So it did move me into another category in my mind.
I love that. I think that's great. It also is like, all right, I'm spending money on this business. Let's go make some money, right? Not only is the insurance tax deductible, which is great. Let's make sure to write it off and get the return on it. But you're spending money in your business. You want to make sure to get a return on it.
Could I ask you while I got you?
Sure.
I still don't know, does the IRS insist that I pay myself? Because I've not really been paying myself. I'm putting all the money back into the business. And I might take a distribution when I actually need $1,000 or what have you, but I'm really not paying myself.
Here's the best way to do it is track your expenses throughout the year. If you know at the end of the year what your personal expenses are and what your business expenses are, you can justify that distribution where at the end of the year, let's say you made $100,000 and you have the records of what you paid personally for your mortgage and all these other things, then you can say, I paid myself $40,000 because that's what it took me to live off of. $50,000, that can be a little bit of a sliding scale depending on where your revenue ends at the end of the year. And I can tell you this is a very gray area question and gray area answer that I'm giving you here. Hey, you know what? Let me just answer this directly, but let's put this slide back up here. The catch-22 of being
Sorry, go ahead.
The catch-22 of being self-employed is you get to take business deductions to lower how much you pay in tax. But the more that you do that and the less that you pay yourself, the less that you qualify for when you want to buy a house, when you want to buy a car, when you want to do these different things. Once you have 2 years of stable business income, that makes it a lot easier to qualify for things. But as long as you're tracking your expenses and as long as you have a professional accountant or CPA, they can help you with how much you need to show as a distribution at the end of the year.
Thank you.
Hey, Raymond stumped me with Ireland. Katie's making me go back to the legal disclaimer. This is fun. I appreciate it.
And we're all going to have a party in Ireland in a castle thanks to Christina Latoya.
What else am I missing? Are we seeing? I'm still cruising through these. Let me just make sure.
No, we actually did a really good job chunking through those questions that had piled up. So good job on that, Tommy.
Of course. Yeah, I want to make
This is great. Are you guys all enjoying this? Is this the kind of information we want to learn right now? First of the year, 2023, because we're all going to crush it. Isn't this it? This is it. Good stuff. Awesome, Carl. Right on, Christine.
Cool. Yeah.
Registered agent has come up. And Christine would say, can you talk more about that?
Yeah, for sure. So a registered agent, there's a couple different types of addresses. You've got a physical address, which is like your home address a lot of times, right? Some people have a mailing address, which is like a PO box at a UPS store, let's say, for sake of conversation. But a registered agent is a physical location where someone works in that building from 9 to 5, Monday through Friday, excluding holidays. The reason that's important to understand is I have a registered agent. There's registered agents in all 50 states. So for instance, the registered agent that we have and I use out of Wyoming, someone works in that building from 9 to 5, Monday through Friday. If I was to get sued, they would serve the papers to that person, and that person has an obligation to get me that lawsuit. So you can't have a business entity set up at like a PO box because no one can serve a lawsuit to them. So it's a way for you as a business owner to protect your privacy, not have to use your personal information, but still have a physical address in the form of a registered agent that doesn't force you to use your address for your business entity setup. Does that make sense? So it's a whole nother business, really, is what it is. But they allow you to use the address for your business entity setup. How much do they usually cost? They're usually about $100 a year, is usually about the average. Every state's a little bit different. California, Massachusetts, they're always going to try and squeeze a couple extra bucks out of you, but most states average around $100 a year. It's not too bad, which also is a tax deductible expense, of course. That's another thing, the entity setup, tax deduction. Paying for the accounting, tax deduction. State income taxes, tax deduction, right? The list goes on and on and on. And the more that you understand it, the easier it is to offset and make the decision to what Katie was talking about of how much do I pay myself out? When do I pay myself out? How do I show it, right? You need to understand the profit and the loss so that you can make the most educated decision on, are you planning on purchasing a home next year? Are you trying to purchase a vehicle next year? Or are you trying to keep as much money in your corner as possible to reinvest back into the business, put it into your own retirement, throw the money off a bridge? I don't care what you do with it. I just want you to make the decision yourself.
Hey, I want to address Stephen Barrett's comment here. Great info. Where's the link? No link today. This is just for your education and for you to benefit from this content. Who wants to have Prime Corporate Services back again? And who wants me to wrestle with Tommy and the CEO, Steve, to work out some special arrangements for Go Mobile Community? And again, another day. Who would like to see them back in just a couple of weeks, maybe? If we have a overwhelming response of people that would love to see how they can help you in certain ways, in a very, kind of a Damien arm wrestled them way, just let us know in the chat so we can see the level of interest, because I'm really trying to figure out what we want to be doing this year. And this is not the environment to be offering you services. You know that. You come here for education, and that's what that's all about for the happy hours. But let us know if you want them back. We'll have them in a couple weeks, and we'll come up with some ideas on how I'll arm wrestle the hell out of them to find out how they can help you in a very affordable way. But this is for your content and really for you to start thinking differently. Roger, you made a good point. You said, this is great. I wish I had it last year. And so, well, sorry, but we do have it for this year. So really the reality is what are we going to do with the information that we now have? And so Katie started us off yesterday in our kickoff call. Thank you so much, Katie, for being with us yesterday. That was like freaking amazing. You laid out step by step your plan to $500,000. And I would tell all of you, if you want to follow Katie's plan, then in a couple weeks, 2-3 weeks, we have Prime Services on. You want to see what they got to do, because here's the thing. When you make $500,000, you might potentially pay, what? Is it safe to say 40% of that? Maybe even a little more if you don't set up things properly. Yes or no?
That would be very bad.
Right. So Katie, thank you for leading the troops with the goal. And I hope all of you that look at this, I mean, you can make your goals, set your goals. Maybe it's 100 grand this year. Maybe it's 50 because it's your side hustle, right? Whatever it is, this is really good information to help you think a little bit differently on how to keep as much of it as you possibly can. As we start becoming more successful, we want to learn ways to keep as much as we possibly can. So that's what this is all about. So it looks like we have kind of, yep. Bring them back. Lucha Libre. Let's do this. Let's go. All right, man. We're going to have you back in a couple weeks.
I'm happy to do it. Steve's a big guy. I don't know if you want to wrestle him, but you'd probably whoop me. So I'm happy to just come back and help. It's all about value. It's all about long term. I hope more than anything that everyone had at least one takeaway today, that you can leave this call and say, this is going to help me. This gives me a little bit more confidence. And if you feel that way, I feel like I did my job. So if there's enough value and you guys would like me to come back, I'm happy to do it. Just let me know, Damien.
Okay.
We'll make it happen.
Now, I have a lightning round that I have to take you through, and I kind of gave you a forewarning, so hopefully I'm not going to throw you off your seat here. But you did make a recommendation earlier on the book, so you do get a second shot at that if you have something personally that you really like that wasn't related to the drop. All right, so first question for you in the lightning round today, Tommy. Now, you remember when I said you were 21, right? Like, you look 21. I swear, you absolutely look like you got a couple years business. And I get it, because that was me. I had to go through that. I had to teach these people. No, I'm old enough. Trust me. I swear I am. Here's the thing. What's the best advice you've ever received? Keyword there being ever received in 30 some odd years.
Focus on systems and processes and get rid of people that you don't like and enjoy working with. So I'm going to give you 2 because I think they're equal. If I focused more on systems earlier, I would have been able to grow and scale this business faster. And I heard it and I disregarded it. And I thought that it was hustle at all times. So systems and processes and having it mapped out would have made it a lot easier to scale, a lot easier.
Is he speaking right to you, Katie, or what the hell? Did we plant a seed here or what? That's Katie's goal. She started this year. She goes, systems, process, and automation. And you just said it. So, all right, what's the next best advice you received? What was that other you said?
The second is just working with people that you genuinely enjoy. And this is something that Steve and I you know Steve obviously well, and it's everyone has different intentions, right? I try and come here and bring value because that's what I want, is people to bring value. And if it's reciprocal, you're going to get more out of that relationship long term. You have people that you feel like are pulling on you. If you have people that you don't genuinely enjoy their company, cut them loose, because it's going to open up the door to someone else that's going to bring value to your life. I've had a couple salespeople on my team that were great performers. I didn't like them. And once I let them go, it's like a weight off your shoulders, and you bring in someone else that revives your energy and gives you this new, found spirit in your company and your organization. And if people don't align with you morally and ethically, and you just don't jive with them and you don't like them, it's, if you don't like Damien's hat, for instance, I think you're crazy, but I cut people loose that you feel like aren't bringing the energy and the value to your moral code of what you aligned for your business and for you as a person. I think it's so much easier said than done, but it's a big deal.
I'll speak to that because Evolved Profits, which is my other company, many of the folks on this call know about that company. And we were faced with that very decision. It's called culture fit. If it's not a culture fit, cut it. And so we had a gentleman that produced $2 million in revenue in a calendar year. His commission was $1 million of that. And we cut him loose at the end of that year. And one would think that that's absurd and insane, but it's not. When it's not the right culture fit, And when you don't get to live your life peacefully because of it, the money doesn't matter. We can find other folks that we enjoy working with that'll find the money. We might need 3 of them to make up the money, but you know what? The happiness, you can't replace the happiness. And so I think culture fit. So cutting people that don't serve you in your journey, both personally and professionally, is not a bad idea. Personally, my family really close to me, my wife, for instance, she's had to do that with very close people in her bloodline, and it's for her happiness. I mean, that's it. I love this advice, Tommy, both professionally and personally. I think it really needs to be understood. It's a very good message. Next question on the lightning round. A book that you would recommend to this group and why?
Rocket Fuel, Gino Wickman. It's one of my personal favorites. It's something that I still reference nonstop within our organization. I love that book. I absolutely love that book. And I love the way that it helps people understand, are you a visionary or are you an integrator? And what are you missing and why? And where is your focus best spent? Steve is more of the visionary. I'm more of the integrator, and we've been together for 10 years. We respect each other, and we understand what it takes to continue to grow and scale together.
And you're clearly the guy that can take boring content and make it really entertaining, fun, and exciting. So thank you, sir.
I appreciate that. Thank you.
Absolutely. Next question on the Price is Right. What would be the app, resource, hack, tool, something other than one of your own that you would recommend to this audience, and why?
Keeper Tax, easy. I will drop a link in the chat for everybody because I love this app. I have spent thousands of dollars on tax apps for everybody here. Don't bother doing it yourself. This app is $170 for a whole year. That's tax deductible. What it does is it allows you to put your credit cards and bank accounts directly into the software, and it'll text you and say, Damien, I noticed you just went to lunch. Was it business related? You text back yes or no, and it organizes it for you in the app. I absolutely love that app. I've got nothing to do with it other than loving it.
Jeez, boy, my app would be on overdrive because everything would be yes.
I know, right?
Awesome. Well, Raymond, thank you. He says, I don't normally stay to the end of the webinar, but very entertaining. Awesome, Raymond. Thank you, buddy. This has been fun. Let's see if we have any more questions that we haven't addressed yet, because we still do have a little bit of time here. And then, of course, Tommy, if you have some more things that you want to make sure that they know before we leave today, it's 23, baby. It's a new year. I'm just pumped. I'm absolutely pumped. Getting to see you guys here today is awesome. All right, so any more questions? Do we have any more questions for Tommy? And Tommy, tell me if there's some stuff that you want to make sure they know before we leave this New Year kickoff call.
I'm gonna, Latoya, it's your turn now. I know you just turned it off, but it's you still got the thing on there. You were trying to sneak out on me right as I was gonna call you, so thank you. Mail-in media, look, just the professional manner that shows, right? When you have client calls, when you're going into it, showing yourself as a business. I love what you've done with that. I think I love that as a deductible expense and making sure you're showing yourself as a legitimate business. It's the same thing that Katie mentioned earlier, and I love seeing the legitimacy of showing yourself as a legal business. So,
oh yeah, let's not forget Katie's question about not charging tax. Should I be charging tax when I sell an app? So when she sells an app, she'll sell an app for $3,500. It'll have a monthly recurring maintenance fee to go along with that. Yep. But that $3,500 is kind of mostly all profit that comes in. Should she be charging tax on that? And so I'm going to take a stab at this. Let's just see if I've got my shit right, because this could be wrong, and you're here to correct me. My question would be, or my answer would be, that when you live in Washington and you sell a mobile app to the Washington restaurant up the street, you have to charge them sales tax. But if you sell an app in New York or Miami or Arizona, you don't have to charge them sales tax? Or did I get that right or wrong?
Correct, yes. And as long as you have a W-9 that's issued and you're showing that it's a transaction business to business, that $3,500 is active income, but the additional will be passive income. So what's really cool is on that initial amount, you want to keep those separate, because that's your active income, the other's your passive income. So whether you do or you don't, this is where we want to take the deductions, is helping to offset that upfront amount that's active because it's taxed at such a higher rate. That ongoing is going to be your passive income that's taxed between 0 and 20%, depending on the income level. So just track it and organize it. But if it is within Washington, it's probably a good idea to tack it on in addition to.
We're talking sales tax.
Yeah, sales tax.
Yep, correct.
Yeah, so like I
My
remember.
client should be billed the design build fee of $3,500 plus the state tax rate on that sales.
Yes,
Correct, yep.
it was in that state. Like, for instance, when I was in Orange County, if we sold anybody Go Mobile Solutions in California, we had to pay sales tax. Well, we didn't charge it, so we ended up having to eat it. You know what I mean? So, like, that's the thing. All the sales that happen in the rest of the United States, including all the other countries, we didn't have to pay sales tax. But anybody that bought within the state, we had to pay sales tax. Or charge it, right?
And then, Tommy, you're saying that's active income versus the passive monthly retainer, which is, they're both deductible.
Yeah, correct. You got it. But the active income is the upfront $3,500. That's going to be taxed at the highest rate. That's where we want to take as many of our deductions as possible. The monthly revenue is passive income. We're less worried about that because the tax rate is so much lower.
But that's on income. But on the sales tax side.
Yes, that is correct. On the sales tax side, you can add on that sales tax. And if you were to just go to the Washington Department of Revenue, you can get a sales and use permit or a reseller's permit that will allow you to include that sales tax on top of the $3,500 so that you're not liable for it. The buyer is.
Cool. All right. We had another question from Christine, probably way up there, but it was one about ending a partnership within an LLC.
So if you have, have an LLC with a partner wants out, how do we do that and the business continue without the soon to be former partner? Can I continue as a one-person LLC? So depending on how the LLC was set up, usually you can go in and just file an amendment with the state and take them off. Let's say you were 50-50 partners, you get verbal consent. I would usually recommend getting written consent and getting it notarized for your records, because when you take off, that person that wants out now is always going to come back barking at your ankles. But if you get a notarized letter, you can go to the Secretary of State, file an amendment and change the ownership percentage while keeping the LLC in the same brand name. It shouldn't be a problem at all.
And then you can move to converting it into an S Corp and all right. Yeah. I'm getting it, man. Thank you, Tommy. This has been invaluable information today as we get a lot of people talking in the chat here saying it's been good stuff today. Good. All right, well, we're going to be closing it down in about 7 minutes, and I can see some people getting their last minute questions in here. So let me just take a quick little look here. You're welcome, Gregory. It's awesome. You will find the replay link because my team will make sure you do, sir. I sell some printing services. I state the cost to me of the printed material, but I charge a design fee. If I provide to Maryland customer, is all of it taxed or only part of it? The printer is in another state and not sales tax qualified.
You will still have to, so it'll still fall under the federal side of where everything's going to go into one lump sum of where the money's being generated. But keep in mind that when you sell that, the company wants to write that off as well, right? So if Damien was to sell me an app, I want to write that app off just as bad as you want to write off the other income, right? Keep that in mind when you're looking for prospects. Not only is it's a tax deductible expense, if you have the overly logical thinker that's having a hard time pulling the trigger, that's a tax deductible expense for them that's directly with the business. And that could be enough for some of them to push themselves over the corner to make that decision. But you will have to show where you sold and how you sold, especially if it's in different states as well.
So if I sold a $3,500 app in California, now I'm assuming you're in California asking this question, do you recommend getting, for example, $2,000 up front and the rest in payments to pay less taxes? Let me ask you a question, Tommy, because, and again, well, let me just ask you a question. So $2,000 up front, $3,500 up front, I'm in California, they're in California. I either charge them sales tax, I pay for the sales tax, either way. Monthly fee as well, no?
So when you do that, usually even if you were to split it up like that, the contract value is $3,500. So the tax would still be on the $3,500 that's active. The monthly is set up as a residual, and it's a passive income stream at that point. Whether it's financed or not, because it's part of the contract value at $3,500, you'll still have that tax rate on it, unfortunately. I like that. Hey, we're getting creative though. That means we're learning, baby. I like it.
Have multiple businesses, but can only have one EIN. Is that correct?
No.
That's not correct, because I have two. Exactly.
Yeah, I've got several. You can have an EIN for every different LLC.
Got it. And Latoya says, to keep things organized, should I bill the app and the monthly payment from two different LLCs?
You absolutely can. Yeah.
But is there a need to do that if it's the same business?
Not necessarily, no. It just comes down to tracking and organizing those expenses. You don't have to do that, but you should have a separate bank account for every business entity. And if all the money's going into it, you just need to know where it's coming from and what it's for.
Yeah, Latoya, I'll give you my uneducated answer. That is absolutely unnecessary. Like because it is the same business. You're charging for the same products and services. Now, I will give you an example of where I paid a lot of money for tax advantage strategies when it makes sense, where we looked at our upfront fees and our monthly recurring. That was back when we had, hundreds of thousands of customers buying our product off the infomercial. We had hundreds of thousands of customers paying monthly fee for software that we built and developed, intellectual property, hosting, right? And so at that level, it made sense because it was millions of dollars to potentially try to look at how can we move this to Ireland of all places, because we've been talking about whatever. This was back then. There were this was 20 plus years ago, things favorable to technology, intellectual property companies in Ireland. And there could have been an Ireland company set up that was online, and all of the monthly hosting, which was charged online to the millions of dollars, would all go into Ireland. And I was going to have to spend the money in Ireland and all this different stuff, maybe buy my castle out there in Ireland. But that's the only time I would think that you would separate monthly recurring from in the same business if you're talking millions of dollars. And and if there's a reason to do it, right? Tommy, would you think? I mean, that's a little overkill.
Even then at that level, you're just going to hire a bookkeeper and have them do it for you. I can't think of a time where it's necessary unless you feel like things are out of control. I would keep it in one. And if you're making millions of dollars, that's what I like to call a good problem to have. Hire a bookkeeper, let them do it for you.
Yeah, because you're getting the same benefit of the LLC and the tax write-off capability and the protection and the privacy, and you're getting all the same benefit for both the monthly payments and the upfront payments for the same company, same brand, same everything. Yeah. All right, cool. We got that one. All right, well, we're approaching the end here. Any last minute questions? Or Tommy, if I could turn it over to you, if you had some things you wanted to make sure that everybody heard before we left.
I just hope it's a value. I think I've covered everything that I wanted to cover, unless anyone thinks I'm missing anything, or Damien, if there's something you want me to dive deeper into.
Just answer Katie's question there, and we'll go ahead and bring her home. I thought having an LLC tied to your 1040 was better than an S Corp. Dumb question, maybe?
Not necessarily a dumb question. LLCs and S Corps are fundamentally very, very similar. They're both what are considered flow-through entities. And what that means is you still have your 1040. You're still going to have the business return. You show the profit and loss, and they flow through against each other. So I see what you're saying, but not a dumb question at all. I think it's a good way to keep it separate and still maximize tax-wise.
Okay, so just so you know, this is the first time people are trying to ask questions all the way down to the finish line. So clearly hit a hot topic and need to have Tommy back. Real quick, do you use or recommend DBAs?
I don't have any myself, but I have clients that do. DBAs stand for do business as, just so everyone's on the same page. All it is a fictitious business name where, let's say that I have Tommy Thornburgh LLC and I have different websites with different names. Sometimes that would make sense to have DBAs just to be able to operate under the fictitious name, but there's no protection, there's no tax benefit. All it is securing the name. So it could be beneficial to secure it with the state, but it is not necessary. I don't have a single one. I doubt I ever have a DBA.
Tommy, this has been absolutely amazing, man. I mean, they're literally knocking down the doors to have more questions answered. I've never seen it in 110 episodes. So clearly, Kit, the financial topic was seriously valuable. Thank you for all of your good comments in here. But you know what we do now? Comments in here are great because we get to send them to Tommy. He gets to see all the comments, but let him get the feel of the Go Mobile love. This 2023 Happy New Year. Unmute. Give Tommy a big Go Mobile send off because, if you want him to come back, make this special. Let's go.
Thank you, Tommy.
Thank you.
Thank you, Tommy. I'm back.
Thank you.
That was a special
Thank you very much.
Yes.
Thank you.
Thank you.
You guys
pleasure.
are awesome.
Thank
I
you.
appreciate it. I'm
Appreciate
coming
it.
back. Hey, whether Damien likes it or not, I'm coming back.
Thank you. Thank you.
Tommy, it's been incredible, man. When I see our folks this happy and this engaged and this energized, it energizes me to keep doing this shit. So thank you very much, my man. Appreciate it. And tell Steve thank you too. Next time he's got to join us, okay?
Will do. Sounds good.
All right. Thank you so much. Appreciate you. All right, man.
Thank you, everyone. Appreciate it.
All right, thank you.
Thank you all for your attention. Thank you all for joining for our first happy hour of the year. Now you can see why you want to be here live. If you want your questions answered by these experts that we pull in, by these thought leaders, by these business leaders that we bring here to give you just dripping red hot content, come live. Do what you did today. I know some of you are in Ireland, some of you in London, some of you out there in Australia. I get it. But if you can make it live, it's so rewarding, right? But just watch out for Go Mobile Prime. You'll see this in your Go Mobile Prime membership area. You can rewatch it again. I know you took notes, but you might have to watch it again to let some of this stuff sink. This has been incredible, guys. Welcome to 2023. Go Mobile or go home. Take care, everybody. Love you all.